All right, I'd like to make it a quick video, but I can't make it a video. So let's just make it a podcast at this point. So let's talk about stocks because I don't know, everybody who has money who ever starts a conversation with me at any type of event just wants to talk stocks with me. That one they like talking. Even my eye doctor once. I had an eye doctor who really fixed up my eyes, great guy. And even at the end of the session, he'd be like, "So, do you know of any good stocks?" So for some reason, because people that I respect and trust, and yes, absolutely, people with money investing always want to talk that with me. I will talk about it in this video because I enjoy the math of what's going on. So I hear all of you who are like, "Yo, why are you like doing videos? Why don't you just keep it to yourself and not tell anybody? I don't why do you have the need to share?" And I sorry, that's what I do. I like to talk and teach about stuff. So let me show you what I built because it's really fun for analyzing stocks. Because now I'm getting to the point where I'm just like, wow, I did 400 companies over the last 24 hours ish, well more than a day, and this is not normal numbers, and I'll explain why. So when it comes to buying stock options, which is what we're doing here, we're identifying which companies to purchase both a call and a put on the same company at the same strike price. Sounds kind of weird. Sounds like you're like a losing proposition almost on its face, which is like, wait a minute, you're gonna put money down on the company to go up and the company to go down? Like you're gonna lose on one of those, Ken. And the answer is yeah, you probably will lose on one of those options, but there are two options that you are going to be purchasing, and it's not about whether or not the stock goes up or down. It's about how much the stock moves in a given period of time. And you're given the option of buying or selling a bunch of shares at a certain price. That's what the strike price is all about. It's like, oh, what does this mean when you buy a call option? Like it means that it's a complicated thing to understand. It's the right to purchase 100 shares at a given share price. And so when the price of a stock fluctuates, all of a sudden you're getting 100 times more value of the stock as if you held the stock, as if you owned 100 shares, but you don't own 100 shares. You just own this contract to purchase or sell 100 shares at a certain price. So every time the stock moves a dollar, it's $100 of intrinsic option value if the stock is what's called in the money, or meaning below or above your strike price, depending on whether or not you own a call or a put. And if you owned a call on First Solar on Friday, your intrinsic value of your option went up by $4,800. 4,800. The cost of owning two options, one of which gives you the right to have to go in whatever direction they went. Like if you had the call, you made money. If you had a put on First Solar, you lost a lot of intrinsic value. If you were in the money, you lost a ton. Like you could have had a put at 230 that was worth $5,000 on Thursday that all of a sudden lost all its value on Friday because they went up $48 and got to over 230. So your put is now basically worthless, especially if it expired on Friday. It was worthless when it expired. So you have to think about the point is you can buy both of them for $1,500. That's a lot of money. Um, and what has to happen next week if you want to spend $1,500? First Solar has to move by a third of this. You have to move by whatever this times the current price is. They have to move by over $15 for you to make money. Well, they might, because they just moved 48. So it's showing up on the top of this list as having the most deviation above the break even movement that you need to have out of them, meaning like that's why I sorted this and put data bars here. Is I wanted to show you that this number matters, like how long it is. Okay. Because in all reality, when a stock moves this much more than its break even amount it has to move for next week already yesterday, boy, are the chance that they're going to move, more than 15 bucks. It's possible. It's actually likely. I mean, because so many people just made so much. Like I just told you that story about how much your option value changed. Well, there are people that bought options in this company and their options changed. And so if all of a sudden it looks like they start to drop, then they might snowball and drop $20 a share. And you could literally make, yeah, like how much money do you make if that happens? Let's sample that out to show you. First Solar, right? So if they move $20, say they go down 20 tomorrow, I think you have to type the 20 like that. Yeah, you have to type it as a positive number because they're moving. It's an absolute value essentially number here. So it's 20, even though they could go down 20, that's fine. Then you make 475 bucks on your $1,525 investment, which is right here. So now they might only go down $5 and you're down $1,000 if they don't move around and they hang out at that 230s and they don't change from this price all week, which is not likely, but if they don't move enough, you could lose a lot more money. So I will say that it's a good purchase actually, even at 1,500. That's why it's showing up here. Like it moved 3 times that much on Friday. So if it moves 1/3 as much on Monday, you can make money on this literally on Monday if you bought it at the price. But I'm going to stay away from it because it's too expensive. It's out of my budget. I do not have $1,500 to guess if that actually happens this week. I'm going to let that go, but I'm definitely going to watch it to see what happens so that I know if the list should be sorted in this order. Okay. For example, let's talk about IBM. They moved as much as they need to move because their option is super duper cheap. It's 193 bucks. And you can think outside the box. You don't have to think about just buying one of them. You can be like, well, wait a minute, I could buy 10, 20 of them, however much money you want to put into the market is your business. Owning more of them allows you to sell off slivers of them as they are profitable at different ranges. So there's a lot more you can do, but I'm just talking about buying one set of them. If you had a budget that is, a reasonable budget for this, this is not long-term investing. This is market volatility tracking and finding deals, right? Like what's interesting about this is that a company that's $122 a share has such a low weekly spread here of only 193 bucks. And these options are actually really, really tight bids and asks. Like the cost of these options and price of these options are changing every few seconds, of the day. And they're going up, creeping up by dollars. And there's a lot of dollars to be shaved there off. You could just keep doing that all day with a company that moves like this sometimes. But here's the downside. That's only $2, meaning they don't move a lot anyway. So while they only have to move 1.6% or essentially $2 a share, they move $2 over the next week in any direction. And they might. I mean, they've been talking Watson. They've been talking like letting employees go and replacing them with AI. There's been a lot of interesting talk. They're definitely not immune to the AI discussion. I think they probably don't necessarily know how to, like Watson is kind of like something that I feel like should be training Chat GPT almost and not be a replacement for what OpenAI is doing. I feel like it should help train the models, the language models, because I don't think that that Watson was necessarily trained to be a language model. Like the language model neural network thing is a different way of like probability response, almost like mathematical words. The more I've been thinking about how it's designed, and it's trying to guess the most probable next word and next phrase and next idea, I guess, as well. And it's interesting how it does that because we don't entirely know what it's doing, but we're starting to train it. And boy, is that a discussion. So we'll get back on stocks though. Point is will they move more than $2? Maybe. You're only risking $193, and you're definitely not going to lose all of that because you will absolutely have the chance to probably guarantee yourself at least half of that back, no matter where they are. at the strike price of 123, like for sure. So this is a buy. I think I'm buying IBM. I want to commit in the video. That one I can pretty much promise you. Of course, you never know until you actually purchase it. But my plan is to purchase an IBM set, a call and put for under $200 because I see this as a deal. That's what I see, and you're probably going to make money on that, especially seeing that they moved almost $2 on Friday. So this is checking all the boxes about being purchased on Monday morning. So there's that. Now I have so many more companies to go through. I only did 400, the top 400, but I mean we could keep going, but I want to talk about, this is the analysis we're going to go through. I don't know anything about this company. I don't know about this REIT, but I know that REITs, which are real estate investment, thingies, that's what the T stands for, is thingies, everybody. No, the REITs, that's not true. It doesn't stand for thingies. I actually don't know what it stands for. Real trust. I think yeah, real estate and insurance trust, something like that. I know that commercial real estate is something that's fluctuating and has a big question mark on it because people aren't returning to cities and going into the office and doing it as much, I guess, or at least companies don't want to pay for it. That is an overlooked impact, which is, nobody ever thought that we'd never go into the office again. However, if we've all kind of gotten used to partially working at home because, even though people get accused of not spending enough time working at home when they're working remotely, you still have to get some stuff done, right? And somehow companies have adjusted to not needing to go physically sit at that computer in the office, because technically there is not most of the time a reason that a computer workstation person, like I was that for many, many years in many, many jobs, and you had to physically go and sit at a computer, do nothing else besides just sit at that computer, right? Well, you can sit at a computer obviously anywhere now, or figuratively or literally, or however you want to put it, you can do that anywhere, right? So as businesses adjust to that and they see big old fat rent bills that they can at least reduce by reducing number of locations and stuff, that is a cost that they don't want to incur. And that's going as a huge question mark right now. And so REITs are volatile because of that potential change in how we work and work together. So I don't know if this one is I could ask Bing or somebody that. I could look up notes, I could look up news. I don't know enough about the company. I don't have forever to work on this, but I'll say this: they moved a lot compared to what they moved to. They're $550 though, so not a terrible price. Like I just feel like it's an industry that is going to fluctuate a lot. So when I see that up here and I see something that's not that expensive, that's why that's popping up in this order. Is it's only a $200 stock. I don't know, like that one probably makes some money too. You could look at the history of weeks or something, but just understand that this is not that bad of a number of 2.7. Remember, you want this number to be listed, what we're looking at, to make sure that we understand what we're doing. We care about this number being super low. Like we could totally sort this in a different way. Sort it by this and talk about these companies. But these companies didn't necessarily move a lot on Friday. And they also aren't necessarily big movers in general. And that's why they're potentially cheap and why this number is low. But it is interesting to see that Procter & Gamble is apparently still the best one so far of the 400 that I've done. So and it's pretty cheap. So I don't know how you can say it. Can't say bad thing yeah. I don't know, this waste management company is, but that's also pretty cheap. Maybe, I don't know. I don't want to look at it that way. I want to go back to the other look that we're using because it's better. But I want you to know that you want this number to be low. Like this is awesome that this is a 1.6 here. It's great. Like You want this number to be low. You want this number to be reasonably low so that this is really low. This is the one you really care about, right? You want to pay not a lot for that muffler. No, you don't. You want to get something cheap. Look at how this pops up in green right here, right? This is huge because it's saying that one of the top movers on Friday compared to what you need to pay is really inexpensive, and it already moved that much on Friday. Like, great. This is probably a winner. That's why I'm only going to commit to buying IBM and expect to make money on this option pretty much. Seeing this string of green all the way up at the top is really fascinating because it won't always look like that. Like, see how it's not always a clean strip of the same color? Like, all it's saying here is that this is a really expensive thing. This number is not awful, but this number is pretty good. This number is good. Super expensive though. Cord Energy. Don't know much about that, but that's not that bad of a price and that's not that bad of a number. I don't know if the options though are tight on Cord Energy, and let me discuss that. So I'm going to look them up in my other source, CHRD. I think it's CHRD off memory. The way you would check that in this table is you look, right, you start opening stuff up and we're going to get notes and things on these companies. So Cord Energies, yes, this is great. Great. This is exactly what I wanted to mention, which is spreads are not tight at all. So here's the note. And this is going to be pretty consistent for most companies. This is an important note, meaning loose spreads. So tight is good and loose is bad. Let me explain why. And you see this note will pop up now. Loose spreads matter. Here's what that means. That means this number is not reliable because this number is not reliable. That's what this means. It means the cost of our options, and this is kind of what I wanted this video to be about, even though we're pretty deep into this, which is the most interesting thing about keeping all this data together is that I really wanted to, I have that question about every company if I don't know the company and haven't been working with them before. And this one I had not heard of. You have to look at what the actual price of the option is. And sometimes that amount is changing. And not only is it changing, but it's not even reliable right now. Like, you don't know this is 150 bucks. This could probably be anywhere from, probably anywhere from like 50 bucks to like 300. Like, this is way off. We have no idea what this is. I chose 150 because that's about between something like 50 or 100 and 250, something like that. That's why I put it there. But we do not know. It's not like those other companies. It's not like Procter and Gamble. It's not like IBM. They have really tight spreads on their options. This one does not. So this number is not essentially reliable. Now you can look at that in a few different ways. You could say, hey, they moved a lot, right? They moved $3. We think we only need to pay 380 for them, but we might need to pay more or less. Maybe you could pay 250 for them, and maybe you could pay 550 for them if you do it wrong. So what you need to know is, like, can you make this number lower? And the way you'd make that number lower is you'd say, oh, you know what? This call, because the company's at 142. If you're going to do a 140, sorry, this has to be more than 150. Absolutely. See, that 2.7 is low. The spread on TD Ameritrade says between 10 and 270. That can't be right because they're already at 270. So this thing has to be like 350 at least. It's probably something like that. And that changes everything. Watch this 2.7 change. Yeah, they just moved. They just actually moved right off the table because they actually are going to cost a lot more. So even though I actually just changed the number that we have to now pay, where did it go? Oh yeah, it's Cord, right? Oh, I'm sorry. Cord Energy is now all of a sudden a 4.1 here instead of a 2.7, because all of a sudden this costs $580, which makes a lot more sense because they're already at 142.73. So the cost of their call has to be at least $273 because that's where the money is right now. So that's the intrinsic value is 273 right here. But we don't know what it costs, meaning if you paid anything less than 273 for a call option, if this is their close at a strike price of 140, you already have $273 of intrinsic value. So it has to be more than that. It's probably something like this even, right? And then, yeah, this one might be a little lower though. Something like that. We don't really know. We're guessing. And so what's interesting about this is, wow, okay, now we're guessing at something that clearly has a really, really big impact on profit, right? If you can get this for under $400 or you can pay $700 for this or something like that, it matters on your bottom line. So interesting things to think about there, but the important thing to know is that some of these are going to have loose spreads, which are going to be tough to know. I would rather have a very tight spread because then at least you know the value of your option. Here it's, you could try to get away with selling something and maybe sell it, but it doesn't really work like that when the spreads are loose. Spreads are loose means there's also less engagement in that type of option and activity, because if there was more activity, the spreads would naturally tighten. So loose spreads is not a good thing. It's a negative when it comes to doing this. However, it does show you can try to attempt to get value if you're really shrewd with your calls and your puts and your limit orders. So there's that, which I'll get into as I continue to do this, because I will definitely share the logic behind what we're doing, because we're going to get a formula that is going to update dynamically. What's going to happen is on Monday, when the market opens, I'm going to just simply import the current look and connect it to today's price here. And then I cannot update the price of the options in real time because of what I just explained to you. It's not a good number all the time. There are tight and there are loose spreads, and you don't know what the price is sometimes. But when the spreads are tight, you have a better idea of being able to sell something on the open market for a much more reliable price. So super cool stuff there. Like I'm going to be about done with the video unless we find something super cool. So we're looking for green strips, right? Dollar Tree for some reason. Are Dollar Tree's spreads tight or loose? It matters. We are going to find that out because it matters. So basically, this is the other stat that I need to start recording, because I wasn't recording this, but this video made me realize it is obvious that that has to be recorded. It's a very important factor when determining whether we can. Oh, I can't seem to open up Dollar Tree. I don't know the answer to that because my computer's freezing. It means it's time to stop the video. But I'm going to start recording that under notes. And I might even just call it, forget notes, but just spread range. I could even put a number on it. Oh my goodness, that's probably what we're going to end up doing. I'm going to turn words into numbers, everybody. The opposite of a language model, large language model. So I'm going to turn words into numbers because no, it's not the opposite. It's actually the way they did it. I'm going to do that to be able to sort this, because we can start to add things like slicers for spread range. And we'll be able to highlight our loose ones and our tight ones, right? This is actually a loose spread with AutoZone, sort of, but they're super expensive, so whatever. All right, guys. I'll get through all the companies eventually, but I'm actually not going to be able to get through all of them reliably by Monday, because if you do the math on that, I mean, how many companies per minute would I have to do? Let's call it 1,500 left. It's like 1,400, 1,480. Now it's like 1,500 actually. 1,500 divided by, call it 30 hours, which I do not have all 30 hours to work on it. I have to do 50 an hour. That means you have to do like almost one a minute. Well, one over, that's not possible. And I looked into some options to get access to, what is it called? Polygon.io, I think it was. And I'm learning how to do that. But here's the thing, you can't really query the exact options price, which is what you need. You need this number. And you probably could query the bid or the ask, maybe, but it's not going to be as reliable as looking at it because you need to determine if the spread is loose or tight when you're determining your value. So, like, what about First Solar's spreads? I need to answer that. I am going to look it up. I'll refresh a computer. Let's do that. First Solar, because it did show up at the top of the list, so we have to discuss it. I can't just ignore things that are on the top of the formula list. Their option spreads for the May 19th they're pretty tight. Yeah, they're tight. Yeah, stuff's moving. I mean, they're like 840 and 870. So let's talk about this. Basically, this is important. So they are, I actually want to say like, yeah, super tight. Because they're not really, but they are tighter than you would think. Meaning that's a really good thing how tight they are right now. And this 855 is extremely reliable because it's right between 840 and 870. The other one's 665 and 670. It's really like this. It's really what it is. And so that number gets even better on the, you can see, yeah, the cost gets a little lower. Like you could probably find this for essentially $1,500 at some point, but they're going to move on the open probably because they move so much. It's just a natural fact because there's too many people that just made or lost a bunch of money, so they want to do something with this. People do want to take a profit. That's kind of why things usually drop after a huge day, unless there's so much behind why they went up that they continue to go up. There's that option too. You never really know, so why not play both sides? Right? That's the way I think you do there. So because they have tight spreads, I have to say like all these are winners so far because of this. Simple formula. Simple formula. Price, low number here. See, the number's too high. They got to move by 7%, but it's okay. They just moved three times that on Friday. Like you're not asking for anything unrealistic to happen on Monday. You're like, whoa, this just moved by $48. What is it going to do? Dead stop at 231.69 and never change? No, that's not what's going to happen. Right? All right. So that's all you're doing here. Seems like the most obvious thing ever. You just need to get it into this table format, do enough analysis, and then look through this list. I want to find one more. Who else do we want? I think we agreed Procter and Gamble is pretty good too, because that's so cheap, and that's good. What else? T-Mobile, only 233. They moved to $1.42. Like, I bet you they have tight spreads. Let's take a look. Let's find them in the list. Like you can do this forever. And this is all I'm going to do on Monday is I'm just going to look at spreads. So I got to figure out a way we're going to update this. I think I'm only going to update them one at a time. Damn it. Yeah. But every time we talk about a company, essentially we update it and it does freeze at the end of the day. So when we look at T-Mobile, which is TMUS, we see that the spreads are really tight. Absolutely. Like basically this number is great. So I'll say tight, you know. This 128 is between 125 and 131. I mean, this is very sellable. So that kind of has to be a yes also. And I'm gonna add, let's bring in the spread range. So it now tells us what it is. You can also do cool things like we can read. I think I've talked enough, but yeah, this is This is going to do exactly. I don't know anything about Atmos. But like I said, I would check their spread to see if it's tight or loose. Pretty cool. Oh yeah, gosh, there's another. Oh my God, I'm not ending the video. Sorry, we're just looking top down. We got to look at it the other way when we're looking for companies. I forgot. You got to do it this way too. Yep. Okay. Here's another one. What is Diageo common stock? That doesn't even sound like it's American. Let's look it up. DEO. DEO spreads they're not awful, actually. The spreads are okay. What is this company? Diego? But the reason why they're popping up on here and why I'm giving them a second look is this is not that bad at 300. I know it's not one of these $200 options. This is more money. And this seems more risky because I know nothing about this company. But moving this is not bad. And the spreads are not bad. So I have to put the note in there that the spreads are actually okay. They're not tight. I'll say that. They're a different range. And I want to come up with a different word because I'm going to end up labeling these ranges and it's going to mean something. They are not super tight, but they are comfortable. That's what they are. They're not too tight and they're not too loose. They're comfortable. Meaning I'm not worried about selling an option at a price that is very close to what we are seeing listed here. For example, the call cost at a 180 is between 90 and 115. So that's not that bad. The put cost is between 250 and 280. Also not that bad, but it's not so tight where it's like this 100 was like between 97 and 105 or something. Like that's how tight they can be. That's how tight they were on a company like IBM. And which are the other tight ones that we've just talked about? Oh yeah, we can just highlight them now. Great. Like Procter and Gamble's really tight. First Solar's not as tight, right? They're tighter than you think, but they're not tight like these guys. Like these two are much tighter. So, wow. See how cool this is? Like it is very easy to sort through this. What's this all about? JP Morgan. Yep, bank, only $300. Not bad, right? Like, is something crazy going on with a big bank? Look at what their share price is. This is why this number is low. And I think that they're actually pretty tight. Jamie Dimon's actually kind of tight. I think they're pretty tight. I'm not gonna look them up, I just remember offhand. But sorry, I'll look them up for you. I can't not look them up for you. JPM is, oh yeah, they're super tight. Yeah, no, they're super tight. They're actually tight. They're tighter than any other company I saw. Super tight. So that means that's also a good one. Because if anything, people are changing their opinion about banks and they're eating up banks that like failed, right? They're buying some, like talk about action. So that is very reasonable. Very reasonable. It's 2.2. It's a low number. You see how the numbers color code themselves? It's comparing to all companies. I like that. I mean, that's the whole point of this is we get to browse by numbers, but also by colors. Like this is good, this is good. You can see the prices of these are bad. It's like, oh, you'd like to grab these companies, but look how expensive MicroStrategy is. And I believe MicroStrategy's range of option price is also loose. Oops. Let's see if this works. I'm going to look up MicroStrategy just because I definitely need the answer to that. It's really important whether or not this is a very important thing. They're okay. They're comfortable. They're actually a little worse than comfortable. Sorry. Oh, that's a tough word. What do we call this? So they're a little worse than comfortable. They're what's that word for like mediocre? Mediocre is kind of okay. Yeah, that's kind of the way I'm feeling, but I could think of a better word. But M is right. It's sort of in the middle of the alphabet. I think it's number 13, so 26 letters. So we're gonna go with M and mediocre. So mediocre is worse than comfortable. So if we're thinking about which options we want to buy, as we look at the numbers, we want to remove kind of things like mediocre. We want to remove loose for sure. And I need to kind of rename AutoZone to what they actually are, which is their mediocre but hot. Yeah, I could say that. They're a good company and they're way up there on this exchange, but their spreads are kind of mediocre because they're so expensive. So the comment could almost be too expensive to answer that question, because any company that's got a really big share price is going to have some range in their option price just because they're so much bigger. So anyway, I am about done, but this is really I'll continue to share what this spits out every day, because as you can tell, we're already starting to get into a formula based identifier of where there's value. And we all want to root for things that are going up, but in this case, you can root for things that go up and down. Does not matter, because you're going to have both sides. So you get to look at this in different orders. And I'll leave you with, I'm going to buy an IBM. I'm not going to buy a Procter and Gamble, but I probably should. But I'm not going to do that. But I'm going to buy an IBM because of the order this is coming up on the list as we go day to day. This is going to change tomorrow too. I'm going to refresh this, and this is totally going to change. And there's going to be a completely different order after it opens on Monday. That's what I kind of want to get everybody ready for. Is like, I'm going to say IBM now, but tomorrow in the middle of the day, like if you run a sample and you look at something, you're going to get a completely different answer for a completely different company. First Solar is going to be somewhere on this list, probably toward the top when it comes to a change, top or bottom. When we look at like absolute value, meaning it's going to move in probably one of the top 50 of stocks, probably for the day, just because of what they did, on Friday. But we'll see. We'll see. I don't know. Anyway, I'll get some more of this done, but you can see all the companies are not going to get done by Monday. But I will continue to talk about what does get done, and I'll continue to work my way down the list and now label the spread range for everything. And we will have a complete list. Boy, I wonder. I'll probably have a complete list of every company at a certain price range. And I cut it off at 25 bucks a share, but I might include everyone and just not review stuff that's below a certain amount. We might do that. Figure out exactly how I'm going to handle this. There's a lot to go over, but man, is there a lot of value to be identified. It's a lot. There's a lot to get over here. I mean, what else do we want to look for? We want to look for a really okay, so what happens when I'm not done yet? What happens if we sort this by, oh yeah, this is what I wanted to see. Backwards order here. Yeah, this is why I want to continue this video, because I forgot I wanted to talk about this too. So what's this all about? Why is there somebody with a break even of 30% that didn't even move on Friday? This is a funny way to identify news that's happening, that's affecting the market. So, in the options market, one would say. So basically, this is a company that had a FDA panel review on one of their, I think, muscular dystrophy treatments or something. Very close vote or something like that. Efficacy questions or something. Their options on a $120 share company, their options at a strike price of 120 are $3,600. To put that in a different perspective, okay, as I sort this list by price instead, and we start to see every company by their share price, and how much their options cost. Another great way of looking by color at this. This is actually really fantastic. Everything should be a pattern, meaning not necessarily this number should be a pattern, but these numbers should follow the same pattern, meaning it should be red, yellow, green, all together now. See how these numbers are actually maintaining the same color shade? That doesn't always have to happen. You'll see it will start to change. It does change slightly in different places up here, meaning it's saying Bookings Holdings is kind of worse than AutoZone, right? See how AutoZone is more per share than this company, Brookings, but their options are less. But that's because their spreads are tighter. I bet you the spreads on this are terrible. I'm gonna look that up real quick. That's important to know. Bet you the spread's awful. BKNG. The spread on that is absolutely miserable. For example, so I'm going to say, loose. Too loose is bad. You don't want to take any loose spread, basically. I don't care what the share price is. It's just, it means you really got to guess at the price. You don't want that. The 3,600 here is between 3,300 and 39 or 3,800. Like who knows? Like this is not good. Hundreds of dollars of swing in price there potentially. So that's bad. So this number is kind of bad, right? I probably have this number too high actually in my estimate. But even if we lower it to 3,500 and 3,000, let's say, because you think about, where are they and what strike price are we talking about? Talking about a 2630, and they're right on 2630 actually. Whatever. Point is, you can see that as you look down this list, the color change matters, right? So these are really, really expensive options up here. Look at the cost of these things. 4,700, 6,000, 43, 5,000, 2,000, 1,000. When do we ever start to have a really cheap one? Costco, maybe the spreads are a little tighter. I'm talking about a really cheap one that pops out in like green here, right? Where does that happen? It happens with McDonald's. I think the spreads were actually really tight on the McDonald's ones, if I remember correctly. Well, let's check because we need to label this for everybody. This is work, everyone. This is work that I think I could train an AI to obviously answer this question by looking at the bid-ask spread and getting an answer. But like, what is that 280? Is it a tight spread? Yeah. Yep. That 280 is between 274 and 290. Like it should probably be about 272 actually. And the 140 is between 134 and 148. It should be about 141 or something. Add a little bit to it and show you that now costs 430. It went down. Wait a minute, did that just go down? How'd that go down? No, it's 282. Sorry. 282. See, it's tough to figure out exactly what that number is. Now it costs $423. Still bright green here though. So I can't deny this. It did move $1.35 on Friday. 31. You can see it's not great still, but it is the first time that something this high up on the price per share list, which means they have more to move simply because they are a more expensive company at 296. That just because they don't move all that much doesn't mean they don't have the potential to. So it's still pretty good. I don't want to say no to seeing that. What else we got? Bam, the Hershey Company. Hershey Company. Didn't move much at all, but still fairly cheap. At less than McDonald's. Does Hershey Company have tight spreads, everybody? The answer is the chocolate syrup says, I don't know. I'm done. It's been a long video, but I hope you enjoyed it because this thing is going to spit out answers, everybody. And as for right now, we're going to go day to day because it's going to be a current thing. So we're going to go with, this is going to be our generic look, which is every time we open up the file and I update this, the options numbers are going to be wrong sometimes. Basically, like the price, the cost here is going to have to get updated every time you want to look at it because this number is a fluid dynamic number. We'll get the price right. And we're going to get the today's change. This is now going to all of a sudden be like today's change, like right now. Friday's price is going to be, you know, current price, current day price, like what is going on right now, what this is going to be. And it's going to change and it's going to be freaking fascinating because you're going to see something and something's going to pop up to the top that's not that all that expensive, that's moving really, really well against its break-even number. Whatever. I know I'm speaking a lot of gibberish here at the end, but let me just say that you're going to pop this up in the middle of the day and something's going to be at like 100%. It doesn't cost a lot, kind of like IBM does. And you're going to be like, wow, this is a great deal for the next week. It doesn't cost a lot. And they only have to move $2. Like they're doing something with AI. AI is part of their company. Watson's kind of an AI thing. Like, how can their stock not move? Like, are they just going to sit back and do nothing as AI comes in? Well, if AI comes in and sweeps them away, then their stock's going to drop. So at least it'll go in that direction. Makes a lot of sense. So there's a reason why this pops up as number one. And that's the only one that I'm going to commit to buying right at the open is this one. And I'm going to try to get it for under $200, a call on a put at whatever strike price. It might not open at 122.84. It might open at like 121, 123, who knows? Whatever it opens at, I'll buy the strike price that's closest to whatever it opens at. And I know not to pay more than $200 or $193, that I'm going to try to get it below this number. And that's the way you should structure your limit orders. Because you know that that's the way you would want to do it. That if you got less than this, that you got a good deal. And because their spread is tight, you can be, yeah, they have tight spreads. I guess I didn't update that for them, but they do. Yeah, they're super tight spreads. So I want to add that in there for them. And then we'll be done with this video. So yeah, guys, it's going to be a really, really interesting thing. Tight spreads. Yep. All right, guys, good luck. May IBM move $2 or more next week. That's all we're rooting for right now. I mean, the odds are they probably do. For all the reasons I said, not just the numbers, but also the spirit of like, are they doing anything when it comes to AI? Because this is AI summer. Like AI is a keyword that makes stocks move. Google does a whole thing about AI and it mentions it a million times in their presentation last week, and their stock went up $5-6 and they're like 117, less than that. So I know IBM isn't having that kind of good press, but I know they were like talking about replacing people with robots and stuff like that. I don't know. They're probably gonna do something. All right. So good luck, everyone. May all your trades be volatile. That was a long video, but it really shows and showcases the value in this. And I mean, the only way you can lose is by there being absolutely no activity and it not going at all, not doing like it's the most boring week ever and nobody trades your stocks and they never move and they sit at the same penny. I don't generally see that happening. I see things moving. It's a fluid market for all of these companies in some way. There's a volume number. I mean, we could try, looking here at the volume and seeing like on our volume meter, this is a different chart we're looking at, different pivot table. I'm going to do descending by volume, which is already doing that. And I'm going to look and say, where is IBM on this list? And the answer is they are all the way down here at 334 with 4 million shares traded, I guess, last week. Market cap 111 billion. So there are obviously 300 or so companies that comparatively are trading more. So in that sense, that's not a good reason to buy them here. But this is a really good reason. The value. See this number just being all super green? It's so inexpensive that if anything moves slightly, you can't help but make money. That's what's happening. That's why it's such a good pick. So I'm going to do that. All right. Good luck. Now your trade's been winning. No, not all, just enough so that you're profitable. That's all you need.